Good morning from the Protos newsroom. The date today is Thursday the 11th of February, and you're listening to the Protos Daily. These are the headlines this morning. A recent survey has revealed that more than a quarter of future and existing investors would consider buying or selling their crypto via PayPal. Europol and US authorities have nabbed the hacking crew behind the $100 million SIM swapping scam. And MasterCard has revealed that it's set to offer support for select cryptocurrencies on its network by the end of the year. But first, at the current time of publication, Bitcoin is trading at $46,000, up 1% for the day. NEM has been the best top 20 performer, up 15% for the day, and the Binance coin the worst, down 4.7%. A survey by intelligence pollster Civic Science has revealed that more than 25% of future and existing crypto investors would consider buying or selling their crypto via PayPal's platform. The survey also discovered that younger responders were more likely to purchase cryptocurrency on PayPal, despite the platform not allowing users to withdraw their crypto holdings at this stage of its development. 13% of users aged 18 to 24 responded that they would be very or somewhat likely to use PayPal for buying and selling cryptocurrency, whereas only 5% of 35 to 53-year-olds said that they'd use it to hop on the crypto train. The results of the survey point to a promising start for the company's crypto services. However, it's worth noting at this point that the offering will be a closed-loop system. This means that any cryptocurrency bought or sold via the platform must stay there, which effectively means users are forced to trust PayPal with their private keys indefinitely. And you know what they say, not your keys, not your coins. All too often with cybercrime, we read about authorities arriving just too late to stop millions of dollars disappearing into the ether. Kind of like the cops in an action movie, turning up to find the building on fire, burning cash in the street, and Bruce Willis's shoe missing in the action. Well, not this time. This time the good guys came out on top when Europol smashed a crypto hacking crew behind a $100 million so-called SIM swapping campaign. The scam saw hackers lift crypto from thousands of victims, including celebrities, influencers, and sports stars, through a complex network that tricked telecom support staff into porting SIM cards to phones under their control. As part of the operation, Europol worked closely with the US Secret Service, the FBI, and Homeland Security, resulting in the arrests of 8 fraudsters. 2 members of the gang were arrested earlier in Malta and Belgium. So, the Protos PSA for today: make sure you use multi-factor authentication with physical devices wherever you can, rather than SMS codes which can be intercepted by SIM swappers. MasterCard revealed in a blog post yesterday that the company is set to offer support for select cryptocurrencies on its network by the end of the year. The payment giant is coming around to the growing popularity of cryptocurrencies, stating that they are becoming a more important part of the payments world. As such, it says it's preparing for the future of payments via an integration that will offer support for a number of cryptocurrencies directly on its network. But it remains unclear, however, whether these crypto transactions will be executed on-chain. The company is planning to give merchants the option to receive payments in cryptocurrency later this year. However, it's not said much about which digital currencies will receive its backing. Previously, MasterCard filed a patent for handing Bitcoin payments in 2013, but later shelved its plans. According to the blog post, MasterCard will be focusing on 4 key elements when introducing the new service, namely consumer protections, strict compliance, local regulation, and stability. Having already teamed up with WireX and BitPay last year, MasterCard may be well placed to directly support crypto payments via stablecoins very soon indeed. And finally, analysis by Reuters has thrown doubt on whether Tesla's $1.5 billion Bitcoin investment will have the same positive effect on the company's stock. It was revealed earlier this week that Tesla allocated nearly 8% of its reserves to Bitcoin, news which saw the price of the biggest crypto by market cap hit new all-time highs of almost $50,000. Despite Tesla's stock price increasing to nearly $870 on Monday, it has since dipped to its current level of just over $800. Reuters noted that the company shareholders have voiced concerns over the move by Tesla, fearing that it could fuel volatility and push its share price even lower. Longtime Tesla bull and former chief executive of Aegon Asset Management, Gary Black, announced on Twitter on Monday that he's sold his position in the company, citing, among other reasons, riskier capital allocation. What's more, earlier today, it was revealed by Bloomberg that the younger brother of Elon, Kimball Musk, sold $26 million worth of Tesla shares as per a filing with the Security Exchange Commission. Whether we'll see more investors cashing out on their Tesla gains is something we'll have to wait and see. The fact is, however, that despite the ongoing controversies caused by the Tesla CEO, its stock price has still increased by more than 420% in the past 12 months, an achievement with which Musk is likely chuffed. Thank you all for listening. To stay up to date with the latest from the world of crypto, make sure you subscribe to the Protos Daily on Spotify, Apple Podcasts, and all other major podcast platforms.